Hello traders, welcome back to the crude oil trading environment series. This is the third and last video of the series. As you recall, I basically created a couple of videos to try to paint the picture of how I look at the context of the day before I start trading crude oil during New York mornings. Now, video 1, as you recall, covered inside days, which were more range-bound days. Video 2 covered outside days, which were trending type of days. And this last video here will cover transitional days, sort of the days that change mid-trading session and how I can see clues on when that might happen or how to transition once I see that happening, because we have to be able to read the market context in real time, which is subject to change at any moment. Let's get started. First, the risk disclosures. Trading futures carries a high level of risk, thus it may not be appropriate for all investors. The investment value can both increase and decrease, and investors can basically lose everything. Under no circumstances shall the company or myself have any liability to any person or entity for any losses or damage in whole or part caused by, resulting from, or relating to any transactions related to future. Again, this presentation is for educational purposes only. I am not an investment or financial advisor. Okay, so now that that's done, here's the agenda for today. I want to define what a transitional day is and show some chart examples so we can see the visual. Then I want to talk about multiple time frame analysis and why that's even more important on, well, every day, to be honest, but how you can sort of use that to frame a context that is transitioning. A couple of red flags that might be able to help you identify when this type of day is happening. And then lastly, how I come up with areas of interest, a couple of them for this sort of day. Okay, so let's start with our definition. Anytime price action is inside of the previous day range and it breaks out, so basically it started as an inside day and turns into an outside day, that's transitional. Sometimes we go the other way. We start outside of the previous day range and we come back and stay inside of the previous day range. Also a transition, what I define as a transitional day. How do we get the previous day range? You can mark off the highest price and the lowest price traded from the previous day, which I'll show you chart examples. My trading hours where I trade crude oil would be from 7:45 a.m. to 11 a.m. Eastern. So this transitional sort of day can happen anytime during that period. Sometimes it happens overnight, and that does send a message for the context of the New York trading session. But many of the examples I show you in these slides will occur during these trading hours for you to see. The timeframes that I'm using are daily and 60-minute for my higher time frame levels and trend. I use the 3800 tick chart as sort of an intermediate sort of time frame. It's not really a time frame, it's a tick chart, but sometimes I don't use that and I'll jump right to the 60-minute. And then lastly, I'll use 350 to 500 tick charts for execution. So that's my smallest candle chart that I am using. Again, you can use any time frame to see the previous day high and low, which will start to paint the picture of the context of the morning. So let me go ahead and show you some examples of transitional days. Here's an example where we can see the previous day on the left side and the current day on the right side. Now, we want to act as if 7:45 a.m. is right now. So therefore, we need to assume that the rest of it to the right has not happened, just so we can paint the picture. Now we come in for our trading session, 7:45 a.m. Eastern time. And we notice that we are inside the previous day range. Prices between the previous day high and the low. So at first, we may think inside day ends in play, meaning we care about what's happening near the ends of the overnight session and the ends of the previous day. Now we need to highlight where the previous day boundaries are. So here is the previous day low. And as you can see, it's sort of in the middle. It would land in the middle of the overnight price action. So that's already not an area we're interested in because we want the ends of the current session to be of interest. So let me erase this. Let me try to find a darker color. Okay, let's use a darker color here. Okay, so what we're doing is observing price action. And as you can see, during the New York session, this is probably closer to 9 a.m., we broke out. So we started inside and it turned into an outside trending day, as you can see, trending to the downside, pretty strong. This is a very large move. Okay, so that's an example of inside day turned outside. Let's do another one. Here is an outside that turned inside. So again, we started there at 7:45 a.m. Everything afterwards did not happen yet. So we're right here. We are above the previous day high. Therefore, it is an outside day. And now typically on the outside days, per the other recordings that I put together for you guys, we typically would be looking for the reaction at previous day high if we were to come back and look to continue the trend on. So upwards, since we broke upwards. Now there's more that we're gotta take into account, which I'm gonna cover next, and it has to do with multiple time frame analysis, because there could be a reason why price has started to turn here. So you don't just start going long and you might be going into a higher time frame ceiling. So there's a few things we want to take into account. But for simplicity purposes, we're just defining that this was an outside day at the time we started trading, and it came inside, back inside the previous day range. Then we went a little bit outside, then we went inside. So this was a crazy day. A lot of transitions and a lot of chop back and forth. Which there could be many reasons for that, but we're not getting into that sort of technical analysis. We're just defining these transitional sort of days. And by the way, this might be giving you a signal that a bigger shift is happening on a higher time frame, because it can look pretty choppy around an area before completely creating a new trend or continuing an existing trend. So we'll look deeper into that. Okay, so those are two examples of a transitional day. So let's talk a little bit about multiple time frame analysis. Multiple time frame analysis is when you look at different time frames, and you usually start at the highest time frame. So let's call, you can start at a monthly, that's humongous, but I usually do weekly, then I'll zoom down to a daily, then a 60-minute, and these will be the way I sort of start to paint the picture of my higher time frame trend. So is the daily and the 60-minute climbing? Is it dropping? Higher highs? Are there lower highs? And then I'm looking for key areas such as weekly high, low, open, and close. So this is all stuff I'm getting from the higher time frame. Now, I think something that's important to note is how you define a change in structure. What do I mean by that? Now, we might have a higher time frame analysis, and we might say, you know what? I see a key 60-minute area, and I'm just making this up. We're like this, we're climbing up, and I'm counting this as a key 60-minute area. Now, remember, we're day traders. So on the 60-minute perspective, we can take hours hanging around here and still be considered a potential rejection. Let's say like that. So that's 1, 2, 3 hours before we start to break down. Let's say if it were to reject at that area. So what you want to do is have the area marked, but on your smaller time frame, determine what would be considered the change in structure that would allow you to now start to look for shorts, even though you were in an uptrend leading into a higher time frame level. So that's sort of how you're painting the picture between a higher time frame all the way down to your execution chart. Now, if you were to get a rejection at a level like this, let's say this is even a daily time frame, and you get a big wick, and you start to get a rejection at this key area, that, remember, we're intraday traders, some of us, that can lead to a complete downtrend from at least an intraday perspective. So even if we were to continue on higher, the fact that we hit this higher time frame level like this, even a small move off of it, this can be a whole 1 day down candle. And for us, that could be enough to be a quote unquote intraday downtrend, let's call it. So I know that can sound a little confusing because you're probably wondering, well, which time frame am I getting the trend from? It depends. It depends how long you're staying in the market. If you're a hyper scalper, you might not even care about trend. You might just be trading a couple of seconds in one little direction, and you can trade all sort of back and forth within the context of one specific trend. So it really depends. Okay, so now I want to come back to the scenario where I showed you an inside day that turned into an outside day. And I want to show you what happens when you start to put a higher time frame perspective on your trading. So we come in at 7:45. Now this is my execution chart. I pinch it in so I can easily see the previous day range, and I can see the current day price action. Now I need a little bit more context than this. I don't just use the current day and the previous day. I need to see a few days of price action to give me a sense of where we are in a trend. Where are we to higher time frame key support and resistance, if you want to call it, or key areas where stops might be swept. So here is us zooming out to a 1 hour time frame. Now the day that we're talking about is, I have to change this to a darker color again because we have a light background. The day that we're talking about is right here. Now, as you can see, these lines, these little perforated lines, that's the day session. That's previous day session. Then this would be the next day session. So we're inside there. At the time that we came to the charts, we were inside the previous day range. So we might be thinking inside day ends in play. But when we zoom out and we look at several days of price action, multiple days, you can notice that the context is actually bearish. Now, how do I see that? I see that because I can see dropping lows and dropping highs. Now, we do have a two-leg pullback, which is very common in a trending environment where you'll have multiple legs coming down and then a two-leg retracement and then a continuation down. So when we started the day, it looked like that, and we were somewhere here. Now that we were inside. Now, what we wanted to note was that the probability was that this may want to continue down, or if we break out the previous day range, which we did, it may lead to a very strong move. Why? Because the higher time frame is indicating that you are in a downtrend. And when the higher time frame is on your side, those moves tend to be pretty impulsive. And that was what ended up happening for the entire day. Now, the next day, I know we're not showing the next day on the charts, but I just want to show you that you can start to see a structural change starting from the 8th here. So my personal definition would be that we would break a high. So we have a higher high. We would come back and then we'd break the high again. Now we have a higher low, and so forth. And that becomes an uptrend in a way, an uptrend idea for perhaps a couple of days from an intraday trading perspective. So that's just, and remember, so this is a 60-minute time frame. So you got the 60-minute bullish divergence, if you want to, for those who love to use MACDs like I do, or another oscillator. Once you show the structural change on a 60-minute, then the moves may start to become impulsive or for the entire day session, which could lead to a strong intraday move for you to monetize on. So that's just something to think about. That's why I like to use higher time frame, multiple time frame analysis to give me a sort of perspective on, can I aim for larger targets because I'm with the higher time frame trend? Do my target need to be near term because I'm counter trending against the impulsive waves and I'm just inside one of these little pullbacks? It's all something to think about. Okay, so let's go back to the other example now. I just want to show you that one. So this was the outside day that turned inside. So remember we were talking about, well, where did this stop? Why did it stop there? Do we want to continue higher, which is our usual outside day perspective? Well, mine. Let's see. We have to zoom out. So here's a 1 hour chart. And again, I'll go to the daily and I'll go to the weekly and I get information from all of these time frames. I'm not going through the daily and the weekly all day, every day, because it doesn't take that long to close the candle. It takes a long time to close the candle. So you only need to look at it, in the morning, let's say ahead of your session, and you can get a lot of information. So this 1 hour chart will change a little bit more frequently during your trading session. So here we are on this day. This is the day that we're talking about right up here. Now we hit what I would consider a stop placement area, a key pivot area from a higher time frame. So a lot of times traders, retail traders may look at this and there may be stops there. So it's a little bit too obvious. So I like to either use that as a target to get to it if I was in long, or potentially reverse from it, poke through and reverse from it. So that's what ended up happening here. Now we were outside the previous day range, but we had a higher time frame level in our face. And overnight, we pulled away from it with bullish divergence for those who like to use divergences on the oscillators. So for me, that's enough to give me a clue that either be careful with the longs, or this might want to come back inside the previous day range for that day. So we're not just saying outside day, go with the trend forever. We're saying outside day, you have a chance to go with the trend until you have a key area of interest or higher time frame level potentially near. You need to have good risk to reward practices. So if you're getting in and you're very close to here, that's not a lot of reward, considering. To some hyper scalpers it is. For me, not so much. So this might be a day that I wait either until we pull back and see what happens at the previous day high. If we come back inside, that starts to get more complicated. And I may just sit out on a day like that. Okay, so moving on, why do we care? At the end of the day, the higher time frame signals are much more powerful than tiny time frames. I don't know if you've had this problem. I have, where you can really get stuck on your small time frame. You started at the daily, you glanced at the 60-minute, and now you've been for an hour staring at your 1-minute charts and taking every little signal and failing to really get a grasp of what's happening from a higher time frame perspective, or losing track of that. So remember, if you hit a higher time frame level, or maybe you're getting a divergence from a higher time frame chart, it can often lead to a change in context that could be the start of a strong intraday trend. So you might want to be careful. So for example, let me use this light color now. We've got the dark background. Say we have the previous day price action. Let me come down like this. And we have, this is the current day. We have the overnight session. And this is the overnight high right there. This is the overnight low. And we're here. Now, what I might be looking at is, I'm inside day, ends in play. So I usually look at the overnight high and the overnight low as my first boundary of potential rejection areas. The question here is, where did we stop here? So we were outside, we came back inside overnight. Is this appropriate to go short here, or am I going short into a higher time frame key area that might actually be holding at this point and lead more to this situation throughout the day? So I may skip this sort of quote unquote inside day because there's not enough room and I'm coming off of a higher time frame area overnight. So that's something to think about. So at the end of the day, I guess the takeaway from this chart is don't lose sight of the highest time frames. Okay, just one more thing about zooming in and zooming out. I'm bringing this up a million times because trust me, I've been stuck on forgetting the higher time frame signals and just taking smaller time frame, little divergences here, little messages, little candle rejections there, and they kind of don't mean anything in the unless you're taking into account a bigger situation, a bigger perspective. Otherwise, you're going to get chopped back and forth and get all sorts of false signals. This is sort of what I drew actually. I probably subconsciously remembered this slide. 7:45 a.m., we're right here. We're inside. Now, typically, I'm looking at the overnight, low and high, previous day, low and high and low, and I'm willing to trade near the ends of it. Now, on this particular day, yes, we can see with our eyeballs, even in the zoom smaller time frame, that we had a down move like this, and then we have a sideways going on. But say you didn't see that and you're strictly just looking at inside outside day. What we could see, if you took this trade here long, anticipating that you would get back up here, you would get stopped out. Okay, that's gonna happen sometimes. But then you broke out downwards. Now this is a situation you don't want to keep trying to go long when now you're outside the previous day range. So the question is this a transitional day where inside has turned outside and now we're turning into a strong down day? So what we want to do is we want to zoom out and get some higher time frame perspective. So look at how much information this has. Our current day is here. We've pulled back. That was the overnight action right there. And we're questioning whether we want to go long when we're near the bottoms of this, or just inside day, like end to end, like that, or what might be happening here. So when we climbed up here, we were hitting an area. If we zoomed out, even if you just kind of glance at it with your eyeballs, maybe you have to get used to this, you can notice, and I highlighted it with the circles, a common area. And this is, remember, these are zones. These are not one straight price. There's a lot of wicks and stuff like that. But generally speaking, you can see rejections, common testing of this specific area around this $91 range. So the question is, we came back to it from underneath. Is it going to hold as a ceiling now and drop, since we have basically a down move happening here? That is a probability of that is a high probability of happening, because you're now at a higher time frame zone. So once you broke out at a previous day low, you probably want to just stick with that that way for the day, unless, at least until you get to the next higher time frame areas. Maybe you mark this off. Why? Because it's obvious that there's probably stops under there that want to be wicked through. So you get to know your instrument. You have to study it, and you'll start to see the way price reacts to these areas that were visited before multiple times, and how it reacts when it breaks it, how it reacts in terms of becoming like a magnet for price. There's all sorts of information you can get. But the takeaway here again is just zoom out. When in doubt, zoom out. That's what I say. Okay. So last chart I'll show you here. In addition to this is a more complex topic, this video number 3. That's why I'm giving a lot of information. And I'm jumping back and forth between short time frames and higher time frames, because they really have to go together. And even on inside outside days, which I didn't talk too much about this because I was more doing an introduction session for the video 1 and 2, but this is sort of bringing it all together. So even no matter what inside outside day at 7:45 a.m. Eastern time, I still have looked at my higher time frames, and I'm still getting and marking the key information. So as you can see, this is a little bit closer to the way my actual charts look. I do mark off previous week high. I got a monthly open here, previous week close, the current week open. This chart is actually from today, which is a very interesting day. So this was an inside day when I started the day here. So of course I'm going to start to look at the ends of the overnights, or not the overnights. Yes, the overnights. Well, here was the overnight, and here was the overnight. So yes, let's mark it all. Now, at the ends of this overnight was the previous close. Now, as you can see, we started getting very choppy here. So this can be super chop fast if you're thinking it's going to reject and go higher, etc. So maybe you give it one try, maybe you're stopped out. Okay, that idea is over. Now we want to look at the previous day low, because that's the next destination. We also have the current week open here. Now there were price came under it before we started to see some wicks. And now we want to see what happens when we come back, if we were to come back, because technically we would like to see this. We want to see it come back inside the previous day range and hold it. But what ended up happening today was we broke out, and for over an hour, this was happening. Wicks, wicks, wicks at the current week open. What does that tell me, and what other information was screaming that this might be a down day for the New York session? A few things. Number one, the overnight action was a downtrend. But that's okay. Sometimes that happens and it can reverse. So that's one little piece of information. But what did it come from? Where did it come from? The monthly open. Now, the monthly open, price traded under it, meaning the monthly open has turned red. So we got a down candle. If you recall, I spoke about this in my outside day video. We got a red monthly candle. At this time of the day, we've traded below the daily open. We have this is monthly. We have a red daily candle. 2 time frames are red, down. This is the current week open. When we came underneath, we now have a weekly red candle. 3 major time frames are screaming sells, are red. They're down candles. So the odds are that it might be breaking down. So as you can see, if you observe price action, it held this area, the previous week low, previous day low and the current week open, and gave a really good sell trade. So it's a lot of information, but once you study your instrument, and you'll start to see how does your instrument react to the previous day, how does it react to weekly levels, pivot swings from a higher time frame, and you will start to understand what price action is trying to tell you in real time. Okay, so I mentioned this, I think I had this slide is very similar to the ones I've had in other videos, but where's price trying to grow on days like this? Again, I love to use previous week key areas, open, high, low, and close, as potential reversal areas and potential destinations. So if you break one, you might be making it to the next one. You might be, as one sort of probability. I look at the key swing high or low from a higher time frame, such as the 60-minute. Like I showed you, there was that one swing high that was screaming that there are stops there. So chances are, if it's heading in that direction, we may want to poke through there. And then lastly, I had mentioned, for those who like Fibonacci extensions and retracements, I use that for trading. You can use the extension tool, because when we're switching context of the day and we have these transitional days, that might be setting the tone for the remainder of the New York session, or for a good part of it. So you can almost act like it's a trending environment. And so say you switch from, that's the day session break. This is the previous day, and we were outside and we came inside. Now maybe we want to use our Fibonacci extension tool to sort of project out some targets. So that's more like 127. Then we got the 161.8. I mean, you want to use price action with it, but that's just an idea of some ways to target on a day like this. So I hope that this series was helpful. Thank you. And if you're interested, you can subscribe to the YouTube channel. And when I put out some more videos, I'm not sure if I'm going to do another series, but I might do a couple of live chart analysis that sort of reflect what I taught in this video series. There's a lot more information to put together, but this is a good start. You could also follow me on Twitter for any live updates. Thank you.